I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like the service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Brock Shimano. Today is Wednesday the 7th and we had the markets here a bit mixed. Let's take a look over at Fire Tips, see where we closed off the day here. Corn for September trading down 4 cents. We saw the December contract down a penny. Soybeans trading up 5.5 cents on that September contract, but we saw new crop trading down 1.5 cents. Wheat in Chicago down 7. Kansas City wheat trading down 3. Brock, we had a pretty interesting day in the market here. Of course, down the pipe here on Monday, we have a WASDE report, which is really what the market's going to be focusing on here for the remainder part of the week. You know, what are the expectations for this report? Maybe you can walk us through them.
You know, yesterday we did talk about a little bit about the analysts' expectations for the production side of things, and then on the world ending stock side of things as well. Today, let's take a look at the domestic ending stock expectations. If you take a look here, you can see that the August expectations are a little bit lower for 2012, 2013 ending stocks on corn. Just 4 million bushel reduction there. On soybeans, just a 3 million bushel reduction there. So not a whole lot of changes to be made to last year's crop. This year's crop is really going to be the focus. If we take a look at the 13-14 domestic ending stocks expectations here, you can see that August we are expecting corn to be increased by about 12 million bushels, soybeans to decrease by about 32 million bushels, and wheat to be virtually unchanged, just down 3 million bushels. And a lot of where we're going to see the revisions, I think, on the corn side of things is the production side. You know, yesterday we were talking about the production side, the yield estimates there, and what a lot of the analysts are expecting, a little bit of a bump up in the yield expectations, and a little bit of a bump up in the overall production totals as well, and I think that's going to add to the ending stocks here. You know, soybeans, a little bit of a different story. They're looking at some revisions made lower to the yield projections there, and also to overall production. And I think a lot of what was driving that was the late planting of soybeans, some of the soybean acres that maybe didn't get planted, so I think that's going to lead to overall lower production, lower ending stocks at the end of next year. Yeah, and that sounds fair enough. You know, we've been watching also domestic use in terms of corn, and we had ethanol come out today. We actually saw weekly output increase by 21,000 bushels, and that brought us up to 853,000 barrels per day. So that's very positive here in the ethanol sector. You know, we've really been noticing that the margins have been increasing significantly. In the last 3 weeks, we've gone from margins of down around $1.75 a bushel for these ethanol facilities to now about $2.50 a bushel, and that right there I think is going to drive a little bit stronger ethanol production in the coming weeks. You know, one of the reasons why we're watching this is really the cash price for corn has been coming off pretty significantly. You know, it was down 19% here, and then you take a look at that over the same period of time, DDGs and ethanol is down only 3%, so that really widens the margins up for ethanol facilities and gives them the ability to start bidding a little bit more competitively for the remaining old crop corn. This is a cash market chart here, and you'll notice that there's a difference between ethanol and the river. Notice on the 26th we watched basis really collapse for both ethanol facilities and the river. We saw corn price and soybean prices all come off pretty sharply that week, but you'll notice that was a bottom for ethanol. It wasn't for the river. Between that time and now, ethanol facilities have been able to improve their basis on average by about 30 cents. However, river facilities continue to struggle here and are down about 28 cents in that same time period. So the bottom line here is, if you're looking to sell any old crop grain, if you have any old crop grain left to sell, it might be worthwhile to really open up your range. Maybe there's some trucking opportunities to some ethanol facilities that you wouldn't normally sell to. Just back out the trucking, and you might be able to add an extra 8 to 10 cents maybe to instead of selling to that local market. And staying on the demand side of the equation, tomorrow we do get the export sales report. Analysts are expecting about 500 to 700,000 metric tons being sold for wheat. On the old crop corn, just about 200,000 metric tons on old crop. New crop 450 to 700,000 metric tons. Soybeans just 100,000 metric tons on the old crop, and new crop 700 to 1 million metric tons. So pretty good sales anticipated for the new crop. Old crop rather lackluster sales. We it should be anticipating that, as we only have a few weeks left here in the marketing year for 12-13. As we head into 13-14, we will start to see better sales for new crop coming down the line. If you have any questions about what we talked about here, give us a call, 877-472-4607. Make sure you follow us on Twitter, @GrainTV is where you can find us there. We'll be tweeting any news that comes across the news wires, or as always, you can check us out on Facebook.
Thanks a lot for tuning in.